Hey everybody, welcome back to our favorite stock show, the Wealth Advisory's Top 10. We're on to March 2025. It was a tough month over the past month. We had some winners, we had some losers. Our precious metals plays did very, very well. Our defense plays did not do so well. Other plays sort of were like in between, and the market was kind of like in between. It's been pretty volatile out there lately, and I've had a lot of people calling and asking, like, why is the market crashing? Why are stocks going down? And so I like to tell them first that not all stocks are going down. Some stocks are going up, and I give them some examples from our top 10. But I, have to tell them that, if they want a simple answer, it's uncertainty. Markets hate uncertainty, and there's a lot of uncertainty going on out there. I mean, we got uncertainty with geopolitical tensions, is the war in Ukraine ending? Is it not? Is the U.S. still part of NATO? Is it not? What's going on with that? Are we cutting defense budgets? Are we not? Are there trade wars? Tariffs. As of right now, tariffs are set to go into effect on Mexico and Canada. We gave them a window. I guess they didn't do enough to make somebody happy. And so they're supposedly going into effect. But this is something I was thinking on the way in. I just want to mention this. I could be completely and totally wrong here. I may be applying too much logic to this situation.
Let's hear it, man.
But I appreciate you guys hearing me out. So tariffs are dumb. Tariffs are a bad idea. They're bad for the economy. They create in economics what's called deadweight loss. Right. But our exports are heavily taxed in other countries, right? Some countries put tariffs on them. Most of Europe puts tariffs on our goods. So I feel like, tariff and tariff, tariffing for tariffs, I understand, where this comes from, right? But the thing that really adds to the cost of our goods in Europe is their VAT tax, the value-added tax, which is applied at each step of a goods process from production to consumption. So the importer pays the tax, and then the person that the importer sells it to pays that tax again. And then, the next person pays a tax, and then finally it gets all the way to the consumer, who also pays a tax. And folks who have traveled internationally are familiar with seeing a VAT, added at the bottom of their, hotel fee or whatever, or their hotel bill. That's what that is. The U.S. is one of maybe a handful of countries, less than 10, I want to say, including Cuba, surprisingly, that doesn't implement one. So really, if you want to go tit for tat, the thing to do is implement a VAT tax here in the U.S. But implementing a VAT tax is complicated, and implementing tariffs is simple. So removing something that was complicated to implement would probably also be complicated. But removing something that's simple to implement is also simple, which makes me wonder if the whole goal of these tariffs is not to actually get up to an even playing ground, but to bring other countries back down to an even playing ground and be like, hey, just go to zero taxes on our stuff and we'll go to zero taxes on your stuff, and then hey, free trade. I don't know. Like I said, maybe I'm applying too much logic to the situation, but
guess we'll find out in a couple weeks.
But there's just this all came from me talking about uncertainty, and this whole tariff thing is a lot of uncertainty. Obviously, some countries are going to want to work with us very, very highly, but other countries, may want to draw a line in the sand and be like, forget you, we're going to do reciprocal, and we're just going to go back and forth. So there's a lot of uncertainty in the markets. Markets hate uncertainty. If they know that the news is bad, they'll accept that. If they know that the news is good, they love that. But when they don't have any idea what the news is going to be coming forward, markets are a predicting mechanism, and they can't predict if they, if the future's as hazy as it is. But at the same point in time, volatility gives you lots of opportunities to be a buyer and to get stuff on discounts. Healthy markets go through corrections. Currently, the major indices, the averages, are not even in correction territory yet. They're within regular trading. You've got stocks that have gone through corrections, which is 10%, between 10% and 20% drop from a peak is a correction. Anything more than 20% classifies as a bear market. These are just the technical levels. I don't know who came up with them, but that's what everybody uses. And so you've got some stocks are down, like, bigly, one might say.
Bigly.
Tesla's down a good, like, 50% from its highs. It might have pulled back a little bit because, I mean, that's just an astonishing drop. NVIDIA got beat up. It had really good earnings the other day, but, I think folks are wondering if it can continue growing the way that it's been growing, and can it compress its multiples and really, or not compress, but expand its multiples, and compress margins and get those profit margins to be like super high, 75% tech company margins. If that's possible, stock goes up. If it's not possible, then maybe we've seen a peak in NVIDIA. So there's just a lot of uncertainty. Nobody knows what's going on. Like, is DeepSeek AI real? Is that going to cause companies to stop spending money? What about all this AI infrastructure investment? There's a lot of stuff going on out there that makes it really difficult to predict what's going on. And I know that sounds like I'm making excuses for my performance from last month, but it's not. All right, it's not. It's me explaining the market's movements over the past month, our stocks don't exactly track the market, but they do move with it sometimes. But like I said, there's always places to make money. We had some winners last month, and we've got some momentum behind some of our positions. And I think that that momentum should hold with all of this uncertainty. These seem to be the stocks to be in. So that's really, kind of the theme of this month's list is momentum. These stocks are doing well. They're outperforming the market, and we think they're going to keep doing it. So we're going to go ahead and get into it. Before we do, I just want to remind everybody, as I always do, that if you're watching on YouTube, we're going to run through our first 4 picks, and then we're going to end everything. We do this as a service for our paying subscribers to the Wealth Advisory, so we don't think it'd be fair to give you something for free that they get. That they have to pay for. But we do want to offer you a discounted subscription. It'll be in a link or a discounted, did I say subscription? I think I said, I thought I said description. We would love to give you a discounted subscription. There's a link in the description below the video. Just click that. It will not cost you very much to join us. And honestly, even though we didn't have a great month, just one of the stocks, our top stock from last month could have paid for a year's membership to the Wealth Advisory. So, and the top 10 is not all you get. You get monthly issues, you get weekly updates, you get access to all of the research that we've ever done, all the reports we've ever written, and everything that we will continue to put out as long as you want to be a member. But if you don't want to be a member, we won't hold it against you. We think it's probably a poor decision, but we'll continue to put these videos out for you so you can get our top 4 picks every month. Just keep watching and subscribe to the channel and give us a thumbs up. Drop comments if you have questions or opposing points of view or whatever. You think we're cute. You want to wish us good luck. We could use all the luck that we get. You may have noticed that we're both wearing green because this is March and we need the luck of the Irish to be with us. So subscribe to the channel, like the videos, drop comments if you feel the urge to, and definitely hit the bell to be notified of when we post more content, because we're going to keep putting these out as long as you guys want to watch them. So with that all being said, I know that was a long-winded intro. Let's get into the list, and I'll try and keep it short from here. All right. All right, my first pick is Innovative Industrial Properties. You guys know I love this one. It is one of the only pot stocks that didn't crash back when the pot market kind of, got a dose of reality in the late 2010s. And it has returned a lot for us. They keep growing their dividend, and it's getting its house back in order. You guys may have remembered. Oh, sorry, let me put the ticker up here for you. IIPR. The other month I was mentioning that it had sort of sold off because folks think that the new administration in D.C. is going to legalize cannabis, and I don't know where they exactly got that idea. The new drug czar is seems to be pretty anti-cannabis to me, or I don't know if he's confirmed yet, but if he's confirmed, he's the new czar. If he's not confirmed, he is the new hopeful czar. And he doesn't like it, so I don't think it's going to happen. Then also, IIPR had a tenant default on one of its leases. That was a bad look for the stock too. People sold it. It turned out to be a really good buying opportunity. Shares have been up a bunch over the past couple of months, so I want to get it back in. Basically what I had said was that this space is highly sought after, and if the tenant wasn't able to figure out how to start making the lease payments again, that they were going to be able to fill that space with new tenants. And basically that's exactly what happened. The tenant and IIPR renegotiated the lease, so it's slightly less per month, but still a pretty darn big chunk of change on these buildings. One of the buildings is sort of up in the air right now, but they've got a deal that if they're not able to figure things out within this month or the next month by a specific date, IIPR gets the building, also gets the licenses that go with that building. So that's like the real valuable part of these buildings. I mean, like the building itself, the real estate, the facility, and all the things that go into it are valuable, but those licenses, there's not many licenses in each state, so those licenses are really valuable. So that would go to a new tenant that IIPR would be able to put into that building. They were able to pay all of the missed payments out of the security deposits. They've collected new security deposits from the tenant. Everything is going really well. They've raised their dividend, every single year since we've been invested, sometimes multiple times a year. It's just a great company. I really want everybody to get into it. And it was up last month while markets were kind of up in the air. So IIPR hopefully could give us another good performance this month, and it is my number 5 pick.
Nice.
All right. There we go. Oops. Send that across to you. Forgot how to use this screen.
There you go.
Sorry about that, folks. Here we go. Next.
All right, yeah, we'll recognize this one.
I love the label. What?
What's going on here?
I gave you the eraser.
There we go.
Sabotage.
Yeah, it's a well-oiled machine here today, folks. All right, we got Sunoco. Now, speaking of feedback, someone recently brought to my attention that this stock has been in the top 10 for the past few months. The reason for that is that it keeps going up. It's up 2.7% over the past month. It's up 11% year to date. So when we talk about volatility and things like that, some stocks going down, this is one that's been going up. It's been working for us. A lot of reasons for that. You probably know this company obviously is a gas distributor, but remember they took over NuStar last year. They got a lot of new oil and petroleum assets to add to their network. They have over 14,000 miles of pipeline, 100 terminals for storage and trafficking oil and gas. And that's important because the EIA just came out and they raised their 2025 forecast for domestic oil production from an average of 13.55 million barrels per day to 13.59 million barrels per day. So we're getting up close to 13.6 even. So we're kind of close. What that means is that we're not going to just set a record for U.S. oil production this year. We're going to set an even bigger record for oil production than previously anticipated. That's going to be great for Sunoco, which again traffics these things. The company expects adjusted earnings of $1.925 billion at the midpoint of its guidance this year. That's going to be up 25% from last year. Again, that's in large part because of the NuStar acquisition, bringing in new revenue streams for Sunoco here. In addition to the capital gains we're talking about, the company also pays an 89-cent per share dividend, and they're targeting annual growth of 5% for that payout. So we're getting good capital gains. We got a really strong top-line growth coming from the acquisition last year from this record oil production that's going to feed into bottom-line growth for Sunoco. You're getting the capital gains from that. You're also getting a hefty payout. So, when you're looking at the kind of landscape that we see right now, I think oil and gas distribution is a great place to be, and it's working out early for us with Sunoco, and I expect that to continue.
Definitely. I was just doing some math over here because the production increase, it sounds small because they break it down into tens of millions of barrels per day. But if you do that out over a week, that's 2.8 million more barrels per week.
Yeah.
So the number starts to sound a little bit bigger.
Yeah, going from 13.55 to 13.59 sounds rather marginal, but we're talking about millions of barrels of oil
huge deal
per day.
That's a lot. That's a lot. Just wanted to do a little bit of math there.
Sure, context is important.
Right? Yeah, that's crazy. Sunoco's been a great one, and Jason's right to point that out, that's why it's been in the top 10 for so long, because it keeps going up. Why would we take it out?
Yeah.
So next up is my number 4 pick, and it was down actually pretty hard last month, this is kind of one of those ones that could go either way. It's Astera Labs, ticker symbol ALAB. But really, all things that were AI kind of are still feeling that DeepSeek hangover. They got crushed markets are sort of still wondering, are people going to keep spending billions of dollars on AI? Do they really need to? Do they need so much power? Do they need all of this compute? Do they need all of this energy? And it's really taken a hit on anybody who was running up related to AI. And Astera Labs is one of those. Also, Microsoft has committed to spending $80 billion on AI infrastructure in the U.S., but has also been quietly canceling data center leases across the U.S. So that's brought some more uncertainty into the market. And I think that this is a good opportunity to pick up Astera Labs. It's down a bunch from its peak. It's definitely one of the stocks that's gone into correction territory. And it's giving us, I have a note here to point out even the nuclear power stocks are riding the AI roller coaster. Because everybody's like, oh, we got to have more nuclear power and got to have it faster because AI. And then, if we don't need all of that extra power for AI, then maybe there's not so much of a rush for nuclear. There's still that much of a rush for nuclear because it's not just, AI that is growing, that's increasing our power demand. It's also, wildly growing population numbers and things like that. But anyway, I digress. We've got a really good opportunity here with Astera Labs to buy it on the dip. The market's a pendulum. It never stops in the dead center on what the actual value is. It always swings from undervalued to overvalued. Right now, it's in the undervalued side, and we should be taking advantage of that. So Astera Labs is my number 4 pick. I hope you guys like it. I hope it works out for us this month. And I'll pass that off to Jason.
All right.
Hey, this is a good one. This is another one that's been a mover for us.
This is a good one, and we're going to get to Barrick, and you'll see it says what it is, folks. It's gold.
It is. It's
there
gold,
it is.
right?
And so we've been talking about uncertainty, right? Well, that's led to a lot of safe haven buying. I mean, we've got inflation that is getting not just sticky at this point, but kind of edging back up around 3% right now, higher than I think we'd all like to see. On top of that, we do have the tariff threat that could, make prices and for some things even more expensive. Not to mention this bird flu that's going around. I mean, there's a lot going wrong in terms of price pressures right now.
Mm-hmm.
There's a lot going on in political uncertainty. That's good for gold. Gold was up 27% last year. That outpaced the S&P 500, which returned 23%. It's up 8% year to date. You're getting a lot of action in gold. You're also getting a lot of central bank buying, by the way. And so that is translated for Barrick. Barrick is up 14% in the past month. It wasn't just gold price driving that. The company had a great fourth quarter, exceeded production and earnings estimates. Its production was up 15% for gold, 33% for copper on a quarterly basis, too. That's not even year over year. That's quarter over quarter. Revenue of $3.645 billion was up 8%, again, quarterly. And the average realized gold price rose 7% to $2,657 per ounce. So that's where the gold price factors in for Barrick, especially because they lowered their all-in sustaining cost for gold production by 4% to $1,451 per ounce. So the gold that they're extracting, they're doing it at a cheaper price point for their all-in sustaining cost. Again, $1,451 for that, and then they're selling it for $2,657. So the margins for Barrick are great right now, and as gold prices continue to rise, those margins will continue to expand. So gold is doing great. I think gold's going to have another strong year after a strong year last year. And Barrick is going to keep going up because of that. This is as simple as it gets. Again, we talk about safety plays, finding a port in the storm. A gold company like Barrick, one of the preeminent gold production companies in the world, is a great place to hide out if you're not quite sure what the weather's going to be tomorrow.
Oh, definitely. The gold market's getting really interesting, too. You heard about all these stories about, how there's a huge difference in prices between New York and London. The London vaults, running out of physical gold to give people because people are, loading up on gold and flying it to the U.S., literally briefcases full of gold. It's like James Bond stuff. It's crazy. And the gold market is usually just super stodgy and gold conferences have dust on them by now. So it's really it's fun to see the gold market get exciting like this.
Yeah, it's really livening up.
And I think it's a great stock pick for March. For our St. Patrick's Day.
Yeah, the pot of gold at the end of the rainbow here.
Everybody needs to get themselves some gold this month. I'm telling you what. All right, so we're going to run through a little recap of our picks, and then we're going to cut this off for those of you on YouTube. We're going to keep going for our paid subscribers. But like I said, if you want to become a paying subscriber, you'll get access to the full top 10. You'll also get monthly issues that come with feature recommendations, so you'll get access to the new stocks before anybody else knows about them. There's really a lot of stuff that goes with it, and I highly recommend it. There will be a discounted link in the description below the video for you to get yourself a subscription. But if you choose not to, all we ask is that you keep watching, you subscribe to the channel, give us a thumbs up, hit the bell to make sure you get notified of when we post new content, and drop us a comment from time to time if you feel like it. All right, and with that, let's go ahead and do our recap. First up, Innovative Industrial Properties. This is our cannabis REIT. They only work in medical cannabis, or only work with medical cannabis companies in medical cannabis legal states. They got sold off really hard, and potentially justly so, but a little bit harder than they needed to. And I think they're good for a rebound. They've been up the past month and a half, and I think they're going to keep going. Next up is...
Yeah, Sunoco. Oil and gas distribution and storage has been a consistently profitable segment, and not just for the companies like Sunoco, but for investors, obviously getting the capital gains and getting the dividend payouts from them.
Yep. That's a good one. I love Sunoco. It's done really well for us. I think it's going to continue to, so you'll probably continue to see
really
it
consistent.
in the
I mean,
top
that's
10.
what you could really say about it. It's one of the more consistent stocks you can invest in.
It really is. One of those logos that you still recognize from 40 years ago.
Sure,
Right?
yeah, it just makes you think of a road trip,
Exactly. Next up, Astera Labs. AI got crushed. The pendulum swings, and I think it's going to swing back, and I think that could start this month.
Barrick Gold, again, safe haven in buying, central bank buying, inflation, all of gold's best friends are back at the party. Barrick Gold benefiting from that. I think that's, again, stability, consistency, profitability from these companies.
And also St. Patrick's Day. Get you some gold, guys. I'm telling you. All right, well, there's our list for this month. I think it's a pretty good one. You'll have to check back with us next month to see how we did. As always, thanks for watching, and happy St. Patrick's Day. We'll see you around.